Hello and welcome to an episode of Casual Friday. I'm here with the Duck. As always, the show is brought to you by Woo. Links available in the description below. 2 shows in a row, Don. So lots of,
New record.
I know, new record, absolutely. Also, a lot of comments previously said, "Oh, I can't believe it wasn't live." I don't remember the last time Casual Friday was live. It's kind of not a thing. These are always recorded. We
Yeah.
could do them live, but then I mean, let us know if you'd prefer that, but we generally feel more comfortable recording, and that's how the shows always come out.
I mean, the thing is, like, the show itself wouldn't change because we wouldn't check chat, I think,
Yeah,
because I
exactly.
think that would make it worse. So it could be live, but then we wouldn't look at chat, which doesn't really make a difference.
Yes. This is fundamentally non interactive as a format. This is just us catching up once a week
Yes.
as we do, and then sometimes less frequently, and then hitting the record button while we do it. The only difference is that once the recording stops, normally one of us gets like super bear-tarded or bull-tarded, like an order of magnitude more than during the show, but that's about it. This is as real as it gets.
Yeah. Which is the better part of the show that we just don't ever show.
Yeah. Oh dear. Look, I've got the BTC weekly chart open. 2 days left, and it's kind of done more or less what was expected or reasonably expected and
Yeah.
discussed last week, which is, hey, it hit the range high, might slow down a bit here or consolidate, as you said, and TLDR, that's about it. And the big levels that were relevant were the range high itself, 104, some ragtag midpoint made up of the weekly midpoint and the daily SR flip at 99, and then the what the fuck are we doing back here at 93, 94. I really don't think anything has changed since that point. We basically pushed into it, and we've been consolidating there ever since, full stop. I'm not personally a huge fan of, oh, is it consolidation at resistance? Is it whatever? Like that type of stuff. People tend to view it on super low time frames and get chopped up as a result. And I think we've seen a bit of that. I mean, look at this hourly chart, right? Like if you're trying
Yeah.
to time the breakout on this based on low time frame closes, it's not been fun. So I think probably at least daily time frame acceptance, or if you just want to be boomer safe about it, weekly time frame. That's probably the most appropriate time frame for this. But yeah, I mean, we rallied towards the top of the range and took a bit of a breather with nothing too radical, I would mention, because like the dailies barely made a lower low close. Volatility is just kind of compressed, and then the intraday time frames are all. I mean, this is pretty narrow between 101 and 104, basically. You know.
Yeah.
Is there any other high time frame color that you think is relevant here? Do you have a developing bias in terms of, oh, this is a weak reaction from resistance, or oh, we're distributing any tea leaf reading with the price action that's available?
I mean, the longer we spend up here, the better, because I mean, if you look at the monthly time frame, the way it is right now is, to me at least, hilariously bullish. And as long as it kind of holds above 100K, that close would be incredible. And it's kind of like 2 weeks to go to the monthly close. So like I generally think this consolidation was one, like you said, expected. Like we hit the range high on the weekly, kind of makes sense after a rally of like, what was it? Like it was 40%. That's quite significant. To kind of expect a little bit of just sideways makes a lot of sense. Like you said, the sideways wasn't too aggressive. Nothing out of the ordinary. Um, and it's good. Like the longer we just chill, the better. I think it's a good base that we can build. The only thing that would be bad would be like a loss of like 100K, or like in general like 90, 96, 97. Basically that last impulse on the daily time frame that we had. That would be a little bit ugly. Would still not be the end of the world, but would just kind of like not look as pretty as it does now. But generally, I mean, as we've been saying, like just looks good, and it doesn't really matter that it's going sideways and people getting chopped up. Um, Sideways after a big move up is generally, in my opinion, good, especially if the trend is bullish and has been. And we're almost back to all-time high. We're basically just chilling. We're chilling in the area that we've been like chilling before in 2024. So yeah, I don't know. I don't really see, like, a lot of people are kind of like on the fence. I don't really see the point. Like just let this thing play out, see how it goes. The worst thing to me seems to have been like the 74, 75K dip. Right now, it's much more straightforward in the bull camp, and the bears would have to do a lot of work to kind of push it back into bear territory.
Where would that happen, or at least the earliest version of that? Is it kind of 99 and giving back
On
most
the
of the
daily,
impulse?
yeah.
Yeah.
Yeah, I think like the warning sign would be kind of losing 100K.
Okay.
But generally, like if you open the weekly time frame, and the old range for me is kind of like 90K to 104, so where we are right now.
Yeah.
And technically, we lost that old range, reclaimed it. So anything above like 95, 94 is still completely okay. Like that
Yeah.
would still be sideways in the old range, and you would expect kind of like it to mark up afterwards. So like generally this looks good. It would have to do a lot to look bad. And I mean, can happen obviously, but I don't really see a good bearish setup right now beyond the one where we just closed that resistance, but it's not really doing anything.
Yeah. That's I think very reasonable, and you can always split it up as you propose, like your early warning sign, depending on your trade frequency and time frames and all that kind of stuff, is 99, and then your big picture, what the fuck, is range loss like 92, 93, whatever you have on the weekly.
Yeah.
That seems fair. I think also just in general, low time frame chasing at the range high has been a bad bet. As per the lower time frames, if you want to breakout trade this, I think you're gonna have to like really pay up for it to make it worth it, and that would be what, like 106 plus on the daily. At least you have like a decent invalidation at that point, which would be this entire consolidation that we're in now. You know, like if we go sideways now, break and hook through kind of 106 all-time high, you know, confirmation is for Christians, as the famous saying goes. So you're gonna have to like pay a premium to put on that position, and then your risk at that point is that you're like buying resistance, buying the top, buying the failed breakout, and all that type of stuff. But at least you'll have a better invalidation, which is the bottom of the range, at like basically 102-ish, instead of having to wait for 99 or whatever else. So there are like a few options available. I just think like low time frame range high chasing is a bit crap. You might as well do it on the daily time frame and pay up for it once there's like some evidence of momentum. And otherwise, you know, if you get a dip, there are kind of two levels: 99 if you're aggressive, and then lower if the weekly metal really gets tested. I just think like, you know, you have to think of this from the perspective of, oh, like 104 is the high time frame range high, and then you go down on a time frame that's way too low, like the 4 hour or even the hourly. And if you've been trying to break out by that, as I've said repeatedly, like that's just kind of a shit bet. And you can lose conviction pretty easily after you've tried like buying resistance and it holds. Like, have you ever had this? Like, I know I definitely have, where you basically fudge your high time frame bias by trying to execute it too many times on the low time frame.
Yeah.
And then those trading losses make you lose conviction or whatever in that high time frame idea, even if it's completely valid. Like, you get stopped out 2 or 3 times on low time frame longs, and you're like, the market's a piece of shit, but really you're the piece of shit because you were too impatient. Like, I've done that a ton.
Yeah, I think it's one of the most like worst mistakes to make, and everyone makes it.
Yeah, it's very tempting though, isn't it?
Yeah.
It's also what you're taught a lot of the time in trading, when I think there's like a sloppy presentation of top-down analysis. And I've got a video on this, and I like to think that I propose a more conservative version, but you'll see people go like, okay, this is a monthly level, let's look at it on the 1 minute, you know, for signs of an entry. It's like, I don't think you should do that. There's a lot of 1 minute candles in a monthly chart. And so like, if you're looking at this from a 1 hour perspective, like clearly the 1 hour is just like way too noisy to try to time the breakout. And I think like more appropriately would be daily acceptance above 104, 105 or whatever. And then, yeah, of course, there's still a risk that you get shafted and you buy the range high, top, failed breakout, etc. But at least at that point, I think the odds are more in your favor. It's a clearer signal. And maybe more importantly than all, there's a clearer invalidation as opposed to just punting it from the underside.
Yeah.
So yeah, that seems pretty fair and reasonable for BTC. There's nothing too spicy on the futures side or perp side specifically either.
Which is also insane because we're at all-time high, right? But like when you think about it, or like around all-time high.
Yeah, no, it is. Like opening, like thing is, like I go back and forth on this because how many times have we seen the argument like, oh wow, we're at this level, and the last time we were here, like quarterly basis was at like 20%, and perps were doing this, that, etc. And then the market nukes anyway. And I
Yeah.
think a lot of that has to do with the fact it's this kind of theme we talked about last week, where a lot of the big, like the spot market has so much impact nowadays because of like ETFs and all these corporate strategies and whatever else. They're like people who look at perps in a vacuum, like let's look at open interest and funding here compared to there. It kind of misses out on the spot dynamic entirely, you know. So I think like in a local sense, it's still a useful comparison just to see like, okay, of this recent leg, for example, how much open interest has been added and what do the premiums look like? Like that type of stuff is still pretty coherent, but I feel like the market used to be way, way, way more perp driven, and you could get multi-time frame insights from comparing like funding levels and open interest levels compared to historicals, even at the same or similar price. And I just feel like that signal has lost some edge because of the impact of the spot market in general. Like I can't count how many times we've had this whole thing of like, oh, leverage is low, and then we fucking nuke anyway because spot stops buying or spot starts selling.
Yeah, I generally think it's just basically like one more thing that you have in your corner. It
Yes.
doesn't mean the market has to do like what you would think it does because leverage is low, whatever. But like if you, for example, see the entire market overheating and you didn't high, the chances that it nukes like start going up, even though like
Yes.
the market has changed a little bit. But obviously, like back in the day when you would be, like you said, when you would be back at the highs and the leverage would be low, like that would almost always break it out. Nowadays, not so much. But I think the risk that you're taking uh, as a trader, when you take a trade in these kind of conditions, is a little bit less. Like the nuke risk is less, just because the market is a little bit more chill on the leverage front.
Yeah. Yeah.
But you still have the risk that some rich dude starts selling their Bitcoin.
I know.
I mean, or stops buying.
It
It's
stops
enough
buying has been the
nowadays.
bigger risk recently. Have you
Yeah.
seen some even like Bitcoin OGs are now being like, oh, it's paper Bitcoin, and there's like spot
Yeah, yeah.
manipulation, and you know ETFs and Sailor have like taken this
People are
much
getting
off.
really bearish. Yeah.
It's yeah,
Like fundamentally bearish, which is different
yeah.
from price bearish.
No, that's true. I mean, they're literally turning into gold bugs, being like the metals are being suppressed and manipulated by paper markets, etc. Like, I
Yep.
don't think it's true personally.
No.
Like, I don't think it's happening. But like, I can understand why someone would think that. You know, you look at like ETF inflows and CME open interest and Sailor, etc., and then the market like isn't at 200K. You'd kind of raise an eyebrow. But then you start to kind of look into it, and you know, a lot of the stuff gets priced in. A lot of the flows are delta neutral, you know, and they're there to arb whatever basis there, which seems to be always shrinking. But funnily enough, that is evidence of the arb trade working, you
Yep.
know. So it's a bit more complicated than that. But yeah, TLDR. I think to summarize that segment, the kind of flat open interest comparison, funding rate, premium, etc. comparison, it used to be like explicit signal that you can act on, and I think it's shifted more to like context slash information. It's kind of it's less strong than it was before, is how I'm framing it at least.
Yes. I think generally one thing that you can, like an argument that you can make is that just generally every single edge that we've had over the years has gotten weaker.
Sure.
In the last, I don't know, like 2 3 years, the market is getting much more professional, and any edge that has been around for longer is, I think, eroding away, and it's gonna be fully eroded at some point in the future. It's just how it works.
But candlesticks is
Um,
still okay, right? Right?
yeah, I mean, it's always, and this is something that I will say for the S&P too, right? Like when like the traditional markets like giga nuke or like giga rally, like this stuff becomes relevant again. It's just in those, like it needs those specific circumstances, right? Like I think day to day, that edge might lose relevance, but then when the market goes crazy, which happens every other year nowadays, right? Like market events where like one of the kind market events happen like every year now with COVID, and then now like
No, for sure.
with what Trump's doing, like all that kind of stuff, like where stuff like companies and stocks and whatever, they go down like 10 20 30 40% in like 2 or 3 weeks on the regular now, and then they full retrace the entire thing back up again. And in those circumstances, I think like a lot of this stuff still works and works really well. I just think day to day, you're gonna lose more and more and more edge, and you're gonna have to look for new edge as you go along. It's just the more mature a market gets, the harder it is to find inefficiencies, because I mean, it's like playing a game when you think about it, right? Like when the game is launched, no one really understands how any of this shit works, and they play any character that exists, and they're just having like fun slash. I mean, there is just no meta, right? And then the further the longer the game is around, the more people figure it out and pick the better characters, have the better strategies. And you can still win with like unorthodox stuff or just being better at those like meta things. But the further it gets along, the harder it gets to find new things that you can abuse. And the quicker people are going to jump on that. I mean, generally, if you want to make any comparison, the gaming to market comparison, I think it's just so good. Works on almost any aspect of it.
Yeah. I think analogies that are based on that tend to be quite accurate. But you also made an interesting point that I agree with. It's like, if the S&P on any given day is just like going sideways and not doing much, what's the likelihood that you have a technical edge? Like, it's pretty low, right? But then I think you can extend the question and say, what's the likelihood that you have any edge as a discretionary trader, let alone technical one? I think the answer is the same. It's like super low. And then if you have these weird market events and, vol explodes and VIX rallies and asynchronous dislocation, all those like fancy buzz terms for shit going wrong, I think what's likely that you have a technical edge in those cases, it's more likely. And then in the same way, what's likely that you have any edge, it's also more likely. But that leads you to the, I think, quite reasonable position that most of your trading should be done not like every single day, day to day, no matter what's happening, but instead filters for these kind of weird async moments in the market where no matter what your trading style is, it's more likely, the market's less efficient, so you're more likely to be able to make it work, essentially.
Yeah.
So like, I don't see that, like I've seen that kind of reasoning framed as an argument against TA, being like, oh, well, on any given day, it's just, markets, it's all like Brownian emotion and this type of stuff. You're not going to find anything. It's like, yeah, no disagreement. That's why I don't trade on those days,
Yeah.
And I think that gets lost sometimes. But I don't blame people for having that perception. It's like the whole day trader Instagram shit. You fucking wake up every single dread day, London open, New York, kill zone, 5-minute fair value gap, fuck your mum, off to Ibiza type of thing. And it's like, no one actually trades like that unless they've got a course to sell. Cool. That's, I think, plenty on the BTC front. ETH USD has come up against a very important level of resistance, and by that I mean it's my long entry. Yeah, exactly.
Yes.
Yeah. So that's like the fucking scariest resistance I've ever heard of. It's
your
I'm back, baby. Long entry. Yeah, it's a rounded retest post breakdown of your long entry.
No, so, please.
Should we be terrified, Don? What's the latest on ETH USD?
I mean, it did exactly what we said last week. Nailed it.
Yeah. I made $0 off that, by the way. Thanks for playing.
Yeah. I mean, I did because I was still in my underwater shit.
Well, I don't know if you made anything. I guess you lost less.
Yeah. But we said I'm gonna give us some clout. We said at 2,300, we said like, hey, where's this gonna pull back to? And we said, nowhere. This is how far it can go without looking shit. So this is where it has to stop. And that worked out quite well. Like from 2.3K, that was the pullback to 2.7. Like that's a nice move.
$1 stop loss, max size.
Exactly. Exactly. I mean, it was the pico low when we talked about it. But no, like what I have on ETHUSD generally is the two consolidations on the way down. So like I have the 17th of March candle on the weekly boxed out, and I have the two weeklies in February boxed out. And we talked about this last week too. I was like, hey, above 2K, I would expect 2.7. It's exactly where we went. And now it's a little bit more difficult because one, it's retesting my entry. So like, I mean, that is just generally when you start seeing green numbers, it's usually dangerous. But two, it's also like just the most significant resistance on the chart, because not only do we have that horizontal here, we also have the old diagonal that held this entire thing up. So like if there's one area of resistance, it's this one. And I think once we get through here, I don't really see a good reason to stop. I don't like once it closes above 3K, I don't think like 4K is a good resistance. Then at that point, I think we'd make a new all-time high. So it's here for the bears or nowhere. So you asked me like how scared should we be? I think a little bit, but to me it's also like the first time in a long time that we've seen ETH strength, and it's still going, right? Like ETH has held up at least for now, which is rare. Like 2 green weeklies on ETH BTC in a row. In this case, it's even 4. Like we're in the
Unheard
fourth,
of, dude. Yeah.
in the 4th week of green. Obviously, the first 2 were tiny, but still. So like I wouldn't want to fade this. But I kind of get where the bears are coming from, right? Like if you're gonna short any area, this would be it. I'm just gonna keep holding, hope that like now that I'm break even and I was down like 50% at the low. Now I get like at least a 2x, right? Like that's just
because
that
like
would
the
just be
market
fair.
moves entirely according to your personal P&L. You know, just
I
like
mean, yeah,
one
of course.
German dude and his spot positions ultimately determine, the path for ETH. I think that's more than reasonable.
I mean, it seems very reasonable to
Also,
me.
like
Yeah.
objectively, it's such a rough trade. You know? Like you just legit stomached 50% drawdown.
I mean, you do what you gotta do, bro.
I fucking hope so for your sake. That's quite funny. I can also see, given the path this thing has taken, why you don't want to believe 4K is going to be resistance. Because like,
Yes.
if it is, there are just kind of no redeeming factors for this thing.
No.
I think what's interesting, I agree with you about this being an inflection point. I think the roadmap for the Bears kind of they have to stuff it here. Because they basically got run over at, that 2.2K level I was yapping about last week.
Yeah.
And I think the argument, somewhat to our credit, similar to how you expressed it, was that if this thing is going to go, it just needs to run through this level completely. And this kind of reclaim, it needs to step on the gas, because any weakness sub 2.2 or 2 or whatever, then the monthly starts to look like a piece of shit, and like the bears are completely vindicated, etc. They're not sweating at all if 2.2K, well, in relative terms at least, if 2.2K gets rejected. Like obviously there was a lot of sweating on the run from 1.8 to 2 with a ton of liquidations, but like big picture macro bears are not flinching if 2.2 rejected. But at this point the argument is more plausible. I think if the bearish roadmap that you mentioned is going to play out, then it kind of has to reject here. And then your quote-unquote confirmation would, I think, be falling below 2K. And then the whole thing just looks like a mid-range retest with a failed reclaim that falls below the reclaim level, like on the weekly, for example, right?
Yeah.
And then that turns into like a bit of a piece of shit. Maybe you play 1.9 for a bounce because of that dodgy cluster. I think we talked about that last week as well. But like bigger picture, if the whole chart is ETH finally rallied, but the best it could do is mid-range. Oh, and then, by the way, it lost the whole reclaim structure in the first place. I think just bullish arguments go out the window. More interestingly, we've seen many cases in the market where you have a level of resistance, it like half does its job, but then ultimately gets, run over, right? And that's always tricky, because if you have a pre-existing bias, then resistance half doing its job gets you like full-sized in the position, but it never really reaches any of the bearish targets, and ultimately kind of retraces any of your UPNL and pushes higher. Which raises the question, if 2.7 does somewhat of a job, what is the maximum acceptable pullback for this thing not to look like a piece of shit? Is it 2.2, roughly around there? Like, I think that makes sense structurally. It would set up quite a nice trap, at least, where it's like, oh, look, it hit this big level of resistance, now it's pulling back, it's fucking over. But the more important reclaim, well, maybe not more important, but the equally important 2.2K reclaim ends up holding. That's where you get a higher low, and then the second or third stab at 2.7 breaks. I think, like, obviously the ideal DonAlt P&L roadmap, and we know that that's what fundamentally moves this market, is that 2.7 does more or less fuck all, and it just keeps blasting like it has been, right?
Yeah.
And ETHUSD continues to look good, and ETHBTC really starts to like undo some of the multi-year damage that's been done to it, etc., etc. But I think if from a neutral perspective or kind of a more moderate path, would be a shallow pullback from 2.7 that ultimately carves out a 2k higher low, and then you can punt there. Like that isn't unreasonable to me. And the roadmap that essentially creates, if you're whatever sidelined or don't have an ETH position, etc., is that if there's a 2.7 break, you could probably pay up to buy that and then pray it's not a deviation, right?
Yeah.
Otherwise, if you get a pullback, I think there's a pretty clear 2k ish. I love that. I love that clear 2k ish fucking contradiction immediately. But a more or less reasonable kind of 2k area where, okay, the resistance is resisting, but this thing is still salvageable as long as this holds. But I think sub 2k, then if you get reamed on that one, then I think
Nah.
you can just fucking abandon ship on that point.
Yeah.
But that's
I
always the
think
case with do or die levels, right? You're like, I'm gonna do it, and then if it rolls over, you're like, I should have never given this thing a chance. Like, what the fuck?
Yeah, I still think, and this is something I said last week too. I was like, hey, if this pulls back to 2K, then I would want to play like the bounce, but
Yeah,
nothing else. It's the same story here. Like 2.2K has to hold. Like now it's really clean to me, at least. Like 2.2K has to hold. At that point, like that's a nice pullback, and that's fine. But like the moment we get into like 2K territory, I would want to play the bounce because I think there would be one, but I would probably want to get out. So right now, 2.7, really important. 2.2 is kind of the pullback level. 2.2, 2.3K. I think that's relatively nice, like the prior consolidation low, basically. And then you look at the monthly, basically. Like we have two weeks to close the monthly, and in my opinion, it really needs to close above 2.2K. If it closes below, I'd be worried. And that wouldn't look so good. But the monthly actually is not that terrible anymore, with this bounce being so strong. Because if you look at it, we had the 2018 kind of high, the highest close that we had there, acted as a shelf on the pullback in 2022. And we kind of made a new consolidation in that area, pushed higher again. And now the top of that consolidation, which is like 1.950 to like 1.660 ish, like that top of that consolidation acted as support again. And we're kind of back into like above 2.2K region, which I like. So as long as we close anywhere to where we are right now, which is 2.6, 2.7K, I think the monthly looks quite good on the USD basis. The ETH BTC chart still looks horrendous,
right.
no matter how you look at it. But that's not necessarily a bad thing when you have a ragingly bullish USD chart, right? Like when you think about it, that just means that there's a lot of potential if this runs to catch up a little bit on the Bitcoin front. But don't get me wrong, like this thing is still very, very close to looking really, really shitty. But at least it's doing something now, which it hasn't done for a long, long time. And that is reclaiming resistances, having some sorts of breakouts, doing good on Bitcoin green days and on the red days,
Sure.
right? Like all of it, like the whole dynamic has changed. ETH has been the free short on like this entire Bitcoin rally,
Yeah,
really.
yeah,
Like
yeah.
people have been hedging on ETH and all that kind of stuff. And I think that has changed now. And people have gotten horrendously ran over by this monthly candle. And it's funny because it didn't really move that much. Like obviously, yeah, that's a good green candle. But I think for the damage it has done, it's a hilariously small one. It's just people got so stupidly bearish ETH, just because they listen to the think tank that is CT, right? Where they're like, everyone is hating on ETH because it's not been going up, so it must go down even more. Something that you will see on any social media that kind of discusses markets. People always think just because something went up a lot, it has to keep going up, and just because something went down a lot, it's kind of shit. And that is not necessarily the case, right? We've seen a lot of the, like, even with stocks during COVID and during like the recent kind of like volatility, we've seen a lot of like decent stuff sell off like hardcore and then just completely bounce back. And that attitude, I think, is a really, really bad one. Like if your opinion of a chart or a coin or a stock is entirely made up on based on whether it's gone up in the last 4, 5, 6, 7 weeks to months, I think you're doing yourself a disservice, especially in crypto, because like these things go up infinitely and then they pull back like 6 months in a row, and you're like, okay, it's over now. And then if you start shorting, I mean, like, what are you doing? Like, it's just not the way to play this game.
Well, you know, the rules of the road are you move your targets on the way up and you move your targets on the way down, and then you miss the actual reversal, and then you double down because you want to be tick perfect and then get run over. That's a classic.
Did you see that Capo posted a black swan again?
Did he?
Yeah,
well, I think if you post about a black swan, isn't it no longer a black swan by definition?
Yeah, but that's what he's been doing the entire way up. So back to tradition we go.
Oh, well, nice that some things don't change.
Yeah, it's good.
Yeah, some sense of consistency. I think TLDR. I mean, look, this is also something I go back and forth on because it's difficult. Like, you're talking to someone about ETH. You know, one person listening might be a short-term trader, in which case you're like, yeah, this is the most important resistance on the chart. And they'll take away one set of, well, you know, they'll view the reasonable course of action one way. You talk to someone else, like DonAlt, who's holding spot and held a 50% drawdown. You
like an idiot.
Yeah, I know, right? It matters far less that this is like the weekly level, because the trade is kind of just like getting started-ish. And it's like a completely different point of context. You talk to like an ETH bull who's been waiting for this the whole time. You would argue that anything above 2.2k is like worth a stab, and they go away with a different point. And you're making the same technical arguments in terms of like 2.7, 2.2, and 4, but depending on whether someone has an existing position and their like trading style and preference, they walk away with completely different views of the market. Yeah. It's like, if you're making a show like this, you either have to fucking try to cover all of those scenarios, or you hyper-personalize. But obviously, if you hyper-personalize, as you know, people just assume that that's like an explicit signal. Like, if you're holding, it's like, well, therefore you're long, and I longed where you said you were holding, and then it went down, and I got liquidated. Fuck you, you know. But then if you do all the different kind of reasonable outcomes based on the levels, you're permanently hedging, and what you're saying is like fucking useless fluff, maybe up, maybe down. So basically, Casual Friday is over. We'll see you next week, because there's no proper way to do it. But yeah, I think the TLDR is essentially your inflection points are 2.2-ish, 2.7-ish, and 4-ish, right? I think that's relatively uncontroversial. Yeah. Well, 2.6 to 2.7, it's like the entire cluster, I think, on the weekly. That's kind of the most reasonable way of articulating it. The reasonable trades that can arise as a result, I think, are breakout by, I'm even typing this, 2.7 brackets premium, and pray you're not a deviation.
Yeah.
Right? That seems to make sense. 2.7, I'm putting it above. Below, I'm going to put do or die for low time frame, medium time frame bears, because that seems technically accurate on the chart. And then for 2.2, it's basically big invalidation for all bulls. Bears get horny if it's lost.
Yeah.
Do you think that's fair? That's about as kind of omni-applicable as I can make it. But those are the, you know, if someone came to me with any of these trades and said, how dumb do you think this was? I'd say, hey, like, I get it, you know? Yeah. And by the way, that's generally a pretty good heuristic, I think. Like, if you had to explain your trade idea to someone else, even if they disagreed with you, would they find it to be like sensible and internally consistent and all that type of stuff? Like, if someone bought 2.899 or whatever, and they breakout bought on like the daily acceptance or weekly close or whatever, and then the trade ended up being a loser, I'd be like, look, I get it, you know, like it was a mid-range reclaim after a range low reclaim. There's 4k on the other side that's been tested 4 times. Like, the trade makes sense to me. Similarly, if someone like shorted 2.7, 2.8, and they were like, dude, the proximity to invalidation was the highest there, and it's like the most important level on the chart, and I didn't really buy the whole ETH strength thing, and they got run over, I'd be like, yeah, like I get it, fair enough. And the same with if they tried to buy 2.2k for similar reasons, it's like this is the reclaim level, proximity and validation, the entire chart looks shit below it, I would also get it. So like I think that's a decent filter for like coming up with ideas, even like especially if you don't have a strong bias. You just pick the spots that matter the most, and then you ask like, would I feel like an idiot explaining to someone else, or like what would my regret levels be if I took this trade and it didn't work? And I think realistically for ETH, we have 3 levels. We're at one of them now, which is the midpoint. There's a mythical 4K range high that Don doesn't believe in, and if it gets there, he'll be the happiest man on earth, having held a 50% drawdown and made it all back and then some. And then 2.2k is just like, oh my god, have we actually fucking fallen for it? But still worth doing business because it's so important. Like, I know this is like a super fucking verbose, boring part of the show or whatever, but I do genuinely, like, when we go up to record this type of thing, I'm like, how do we make this useful, you know? And it's always tricky because you're dealing with like so many different time frame preferences and trading styles or whatever. And on the one hand, you want to be clear and precise and share your views, etc. But on the other hand, like, this isn't like a self jerk off type of channel where like, this is what I did, this is what you should do. Like, ideally, at least my goal is that people can eventually watch Casual Friday episodes even from the past and pick up on like the decision making framework and the process. So even if the prices in that moment aren't useful, like the actual underlying reasoning and the sort of presentation still has valuable tidbits within it. How do you feel about that type of stuff?
No, I 100% agree. I mean, I feel sorry for anyone that's rewatching all the. I've seen comments where someone's been like, I've rewatched the entire like 2 years worth of videos on this channel. I was like, oh, dude, I'm so sorry.
There's a parasocial relationship there somewhere, you know?
Yeah, but I 100% agree. Like the process is much more important than like that. Like everything, like people are like looking at single trades and like, oh, this person's a genius, this person's an idiot. But the process is much more important than every single trade. And then it kind of like whether trading style makes sense or not, just kind of averages out. Like you cannot really judge anything based on like a good or bad trade.
Oh, for sure.
Like there's a big difference between a good and a bad trade and a winning and a losing trade, and people just don't really understand.
And then between those, short-term results versus like the lifespan of a trader, like you can have someone who catches a hot streak and you check their Twitter every single day, or whatever social media thing, and they're absolutely killing it, and even if their calls are all right, and then the market turns and they would just like get it all wrong and give back everything. So then how do you assess that? It's like, oh, well, this person was on a hot streak, but then their hot streak basically zeroed out their account. So like if you took a 3-month snapshot of their performance, like 1 month, amazing, 3 month, amazing, 6 month, fucking zero, for example. And then reasonable question, like, is this person a good trader? I mean, objectively, no, but it also depends on your snapshot period and whether you can kind of recognize that their hot streak is over and they're not worth listening to anymore. Like it's very nuanced. Like a lot of 2021 characters, I think that was the year where it was kind of the loudest, right? They're just making millions every single day, like 10 million a week, just like longing their longs, etc. And they literally looked and felt untouchable. But then most of them, and so like if you weren't copy trading them or like at least following their read of the market, like you were kind of missing out because objectively they were cooking. But then it ended up going to zero. And then if you weren't wise enough to realize that it stopped working and you kept not unreasonably just kind of following them because they've been right all along, you also ended up at zero. So this is why social media is just not useful, right? Like you don't know if someone's actually taking the trades. You don't know what their risk appetite is like and preferred trading frequency, trading style, and all that type of stuff. And then you also don't know if what you're seeing is like an isolated good streak, isolated bad streak, and you don't know like the sort of lifetime volatility of their P&L and how their strategy scales. And like none of that stuff is known. So you just get fucking noise, right? Like, oh, someone drew a chart and X is bullish and therefore I'm going to go buy, like that type of stuff. It's just like doesn't work. And even when it does work, if anything, it's a reason to be suspicious. Like, oh, this guy's like on a super hot streak. What tends to happen, and we've seen this a lot with like copy trading vaults on like centralized exchanges and stuff. People just like pile in, but then the second it goes wrong, the copy traders don't have enough like autonomy to realize that it's time to switch the thing off. And also they've like built up a lot of social credit, if you will, for printing the money in the months beforehand, and so they just go down with the ship as well. It's like that chart of the life expectancy of a turkey before Thanksgiving, you know? It just kind of
Yeah.
like trends up, trends up, trends up, and then just basically goes to zero in one day. So then you look at that whole thing and it's like a question, is this like a good trader or should I follow this person? It was like, yeah, if you're in the Goldilocks honeymoon period zone, that's fine. But then always on the other side of that is Turkey Day. And then you have to have faith in your ability to recognize when the tides have shifted or something's gone wrong to get out before Turkey Day. But then that raises the further question of if you have that ability, why don't you just fucking trade yourself?
And the answer
Anyway,
is you should.
yeah, and the answer is you should. Anyway, I don't know if that was useful or not, but I just wanted to fucking share some of the ADHD thoughts that go on in my brain when we're making these types of shows and talking about levels and
Yeah.
trade ideas and whatever else.
I mean, with what you said, basically, I think what you have to take away from any of it is just the process rather than what we're doing. Like if I'm like, hey, I bought ETH, that doesn't mean you should be buying ETH. You should be thinking like, you should be listening to the reasons that I give why I bought ETH, and then be like, hey, is this something I agree with? Does that make sense? And then you make your own decision, right? But if you just blindly do whatever the fuck I'm doing, or anyone else for that matter, there's very low chance that you're actually gonna make it in the long run. So, and I mean, I could say the opposite, right? And this is
Yes.
what most people do, right? They're trying to make this kind of cult of personality and just tell people that, hey, I'm the greatest, you should always be listening to me. But it's the furthest from the truth, and it's the best way to get wrecked generally, is by just turning your brain off and doing what other people tell you to do. Like this is a PvP market, right? Like you have to actually use your brain long term to survive. And if you don't, yeah, you can hit hot streaks, but you're gonna give it all back. And this is just there's a lot of complacency going in on this as well, right? Like you're like, oh, I've been doing really well following this guy's advice, I'm gonna keep doing it. But like you said, at the end of the day, that hot streak is gonna come to an end, and then you're gonna lose it all. So look at kind of like listen to the thought processes that we have rather than just trying to copy exactly what we're doing, because you always have to make your own strategies, your own kind of like way at looking at the market, because you're also going to have different pain points. You're going to have a different situation at home, a different financial situation, right? And that all differs. And if you just copy what someone else is doing that is in a completely different situation than you are, that's probably not going to work too well.
Yeah, no, I couldn't agree more. I want whatever the opposite of a cult of personality is. I know that's ironic coming from like, oh, there's like a YouTube channel, big Twitter account, whatever, but like I don't I'm sure you get negative like you probably don't like the whole DonAlt is X
Yeah,
and then
yeah.
that's it. That's the argument. Like I think in an ideal world, what I say, you say, we say, whatever, gets fully disintermediated. I don't know if that's a word. From the person, and it's like, okay, there is an argument that because A, B, C, D, E, F follows or whatever. Like that, I think, like viewing any type of trading content from that perspective, I think is just way better rather than investing in cults of personality. There are also just weird kind of game theoretic reasons for why these trend following cults of personality fail. Like you sort of start to like the person in those shoes, their incentives start to get perverted the more successful they are, both from a P&L perspective and a social perspective, right? Like if you're like the bull and the market is going up and also your engagement is going up, like two things happen. First, a lot of the time, these people straight up, as we've seen over and over again, get completely captured by their following and the social side. And as absurd as it sounds, like the clout element and the status games that are played take precedence over the P&L and over the trading itself. And that in turn ends up affecting their judgment to like where even if they are bearish or even if they want to de-risk or even if their trading system says one thing, the pull from the social clout influencer side basically overrides that and clouds their judgment and forces them and by extension you, if you're following them, into positions they wouldn't otherwise hold or enter. I mean, I've felt this on a micro level. Like, when I used to trade, like, make calls much more sort of vocally, and I'd like, remember the 30K bottom or whatever? Like that wipeout nuke. I was like,
Hmm.
yeah, I'm just like buying this dip. And I think you were in a similar trade around the same time, and we just kind of held it to different points. But like, I remember this feeling very vividly, where I like called it out, and then it was immediately in profit, and it just started fucking ripping. And people were like, oh, this is such a good call, and you get tagged in like mentions and retweets, etc. But then it was hitting like a resistance for me. Like, at least my system was like, okay, good trade, time to fuck off. But I'm there like refreshing Twitter, looking at all the nice comments and followers increasing, etc. And I'm like, oh man, I really don't want to disappoint these people. And like, there's a real pull there. And then obviously I snapped out of it, and I was like, what the fuck am I doing? Like, fucking close this position, and I'm gonna close it as well. But like, if I'm hyper aware of this stuff and I experienced it, you can only imagine what it's like for someone who's like uses a good hot streak to propel themselves into the social limelight. And I think in many cases straight up get one shot by the social media and clout dynamics of it.
Yeah, it's really weird.
It's
when
weird,
you've gone
right?
through it, where it's like you're the biggest hero, and everyone's celebrating you, and then like you change your mind or something, and you like and you have to fight these same people that were celebrating you because your mind shifted. It's really fucking weird. And it's also weird when it keeps getting hotter and hotter and hotter, right? Like you're just like the biggest winner and everyone loves you, and there's always going to be a fall from grace, like literally always. And it's weird from like it's weird to experience time and time again. It goes through cycles as well, like that whole cult of personality thing. I dislike it personally. It's just not for me. Like when I get too celebrated, I want to counter trade it. That's just how my brain works. It's generally
Yeah,
like
yeah.
when everything is consensus. The same with trading, right? Like when the position, like when everyone's kind of like super bearish because the market's just gone down so much, I just want to counter trade it. It's the same with cult of personalities, where I'm like, even if it's myself, I'm like, I
It's
want
like,
to.
people like me? That's bearish. Get me the fuck out
Yeah,
of this position.
just please.
Especially in your case, with your politics and
Oh yeah,
all of the other irredeemable factors about you.
oh yeah, that's why I'm nuking my account with politics, just to make sure
Yeah.
that it stops the
Clearing
cult
your
of
cache.
personality.
Yeah,
Yeah,
exactly.
you need a few haters to keep you humble when you have a social media account.
Absolutely. Well, I will hate on you until my last breath, Don. So don't worry,
Thank
you're
you
more
very
than
much.
covered on that
I
one.
appreciate that.
Philosophy lesson aside, not even lesson, just fucking two undertrained,
Idiots.
underqualified morons
Yes.
pontificating. Are there any other charts that you want to look at? I think the S&P is a spicy one because, I mean, it's just melted everyone's face off
Yeah, it's
in the
actually
most
crazy
straightforward sense.
how that bounced there.
I mean, it's
I
the monthly
mean, look at the
cluster.
monthly.
Yeah.
Look at the monthly, dude. It's hilarious. Actually, did it close green? No, but just barely.
Yeah.
Just barely closed red.
I mean, I think we mentioned it last week. Like, the high of 2022
Yeah.
was the Pico bottom.
Yeah.
And if that doesn't make, at least present some evidence for what you proposed earlier, that when the markets go to shit, really dumb technical stuff starts to work, even more so than usual. Like, you're impossible to convince, I think, if that carries no weight for you. It's like, among all the VIX blow up, tariff, Ray Dalio world order changing volatility stuff, the market bottoms at the former high. Like, you can't make it up.
Yeah,
Like,
it's
up 1,000
hilarious.
points from the baby pips level, basically. There was also like a ton of weird sentiment around the lows, being like, oh, all the hedge funds are short and all the retail is buying the dip and retail's going to get run over. And like, retail seems to have done okay. Again, that doesn't guarantee like the long-term outcome of their portfolio, but there's a lot of dispersion just around tariffs in general. Like, the ports are empty, like my favorite meme from all this type of stuff. But this thing is basically back at an all-time high.
Yeah.
This would be a super fucking brutal place for a lower high to emerge, it feels like.
Yeah.
But it's almost too close. I don't know. Like, I haven't measured the
It's a little bit
retracement, but
high,
like,
yeah.
it's. I mean, what
Like
is it now?
as someone that loves to be bearish, it's really it's a disgusting place to be bearish because you're too high. Like
Yeah.
you're too close to your all-time high.
Normally it's like 60. I mean, just making this out of my ass, and it's not a technical rule, but like 60-80% ballpark for like a higher low or a lower high type of thing.
Yeah.
Otherwise, you start getting too close to the low and too close to the high. This thing is overshot. I think the only
Yeah.
way the technicals could start to look stuffy on this thing, if the reclaim level fails, which is like 5,700 ish, basically the shelf that was retested and then led to the nuke. We've even reclaimed that now, but I think the earliest kind of evidence of validation for bears would be below 5,700, just from a brain dead like TA perspective, and that's a monthly cluster as well. On the daily, it's like, you know, the pretty self-evident range low before all this shit broke down, etc., etc. But like that's currently not in the conversation, you know.
No. I mean, at the end of the day, right? Like, what has happened year after year after year after year is that the S&P's gone up and to the right, and technically speaking, with having spent like the entire year now trading lower, right? There is a little bit of catching up that you could argue for, right? Like this thing generally goes up like this in this amount year over year. We had a massive pullback, right? That was, I think, not necessarily like necessary. It's not like the market was kind of like in a place where it needed to. It was just like policy that nuked it. So if the policy reverses, maybe we just bounce a little bit more. Generally speaking, it's really hard to make a call on this. So I think just based on the fact that this entire pullback was policy based, and now the like we have a little bit of a bounce, but the policy has not fully been reversed. So you can make an argument like, hey, this runs, but the higher it goes, the more at risk you are of like those policies just hitting heavily, right? Like actually having an impact. But also this thing just always goes up and to the right, has been for hundreds and hundreds of years, technically. So I mean, or like what feels like hundreds and hundreds of years since it's existed, basically. So it's kind of like, I don't know. Like I'm glad I trade crypto and don't have to trade this, because it seems really hard.
I don't know, man. You just bought the former high and sail off into the
I mean,
sunset.
yeah, and just hold it. I mean, at the end of the day, that's kind of what it is, right? It's kind of what I'm doing with crypto. It's
Yeah,
just that I
yeah.
didn't get a good enough entry. I'm only break even now on ETH at least. Other things I'm up quite a
Yeah,
bit,
of
but in
course.
ETH break even. But yeah, I don't know. Like to me, like that whole like tariff thing, the whole crime cycle is so hard to understand in the traditional market, but it works quite well in crypto. So I've just been kind of
No,
like,
quite reasonably.
yeah. So I've just kind of been like focusing on crypto. Been like, uh, who knows where the market goes when you have like the entire world kind of losing faith in the system that we have now.
Until
And I
there's a
think that
pivot.
nah, but I generally think even if there's a pivot, right? Like I think, and this is something that I've noticed in the last couple of years, like the whole like conspiracy thinking and like all of that stuff is like really mainstream now. Like everyone distrusts everything, and at this point, like where do you go with a market that people just think is fraudulent, right? And like the answer could be up, right? Like you have like massive, like everyone's like, oh, this is massive fraud, so let me pile in, right? Like this is what we
Yeah,
do in crypto. Like the answer could be up, the answer could be down. Like that's really fucking hard to say. In crypto, I know if it's fraudulent enough, that's probably gonna go up. So I
yes.
focus on that because like the crime cycle is in full swing. So I'm happily trading the thing that is the most criminal,
Happily
which is
aligned with
crypto.
criminal interests. Yeah.
Yeah,
No, I think that's fair. I just really hope this doesn't get stuffed, because like
be so
it doesn't
disgusting.
help.
Yeah,
Yeah, I mean it'd be disgusting. You know, it'd be an insane trap, right? Like bottom on peak tariff fear, and then top out in like peak, oh, we've pivoted complacency, and like a lower high out of nowhere. That'd just be a piece of shit. But also I think if it's bad enough, it would spill over to crypto, which would be
yeah. I
really
mean,
good.
I agree. I generally think if, and this is the good thing on the downside, the moment the market goes down again, you're gonna see more policy pivots, right? So basically, like the downside, like if it gets bad enough, you're gonna get a pivot which is gonna make it a little bit better. So like the downside is a little bit on the capped side of this, but also like the upside is a little bit limited given that there's a lot of uncertainty. I think it's just like the nice and orderly kind of move up and to the right that we've had for a long time now. I think is a little bit in danger. You're either going to get like massive rips like we've had now, or you're going to get massive rips down like we've had when the tariffs got introduced. And I think that's basically it. Like the nice and easy kind of walk up path, I think is a little bit less likely. It's annoying. Like it's nice when this thing goes up and to the right, and you can just kind of count on that.
Right.
Of all things, now we kind of have to start being like, hey, how is macro doing? What is Trump gonna do?
Headline
What is
season.
Yeah,
It must be such a pain in the like for traders. It's probably better, like low time frame intraday traders, just like more vol sharper moves versus
it's
drift.
better. There's
But
more
like
money to be made.
most people don't use the S&P for that. Like I think most normal people, it's like at least if you have, I think if you have a sensible like life portfolio, not financial advice or whatever, I think you probably have like some exposure to like indices and equities. And if you're a crypto native, that's supposed to be like the boom of shit that roughly returns what like 8-10% a year or whatever.
Yeah, that's
and you don't
shitload.
think
Yeah.
about it. And then now it's like, oh, it's like down a shit ton, and there's headline news that it's ripped up more than crypto or whatever else. It's sort of taken away that nice passive chill out. I'll use all my schizophrenia on crypto feeling, and this will kind of just tick in the background and do its thing, which is always fun. Are there any altcoins that you think have either moved a lot since last week or that you're looking at? We talked a bit about Sol. That basically entered the same consolidation pattern as BTC in the last few days after pushing up. That's basically been a lot of altcoins. I mean, Hype is still strong. Spoke about that last week. Fartcoin still trending up, but a bit weak recently. I mean, I've got Dogecoin again, like post impulse, bit choppy. It seems like the market just got lifted higher on the ETH impulse. And since Ether slowed down a little bit, most of these alts have as well. At least like the big liquid ones on my watch list. With Aave up 9% today, that said.
Yeah, I generally like a few things that are profiting off of the ETH move more than others. Aave being one of those. I generally think that's probably, as long as you have ETH strength, which you still have, you just need to zoom in far enough. Like if you open ETH Bitcoin on the daily, you're like, that's nice, and then you zoom out, and the downtrend never ends.
That's exactly what I just did. Yeah,
it's like it's a little bit of a funny story, but I, as long as that continues, and right now I don't really see any weakness on that chart in the short term. You're gonna see the ETH things outperform, which is nice for them, because I mean they've been underperforming for the longest time. But that's basically it. I'm personally, I still have my XRP bags, but that's still ranging. I still don't hate the Solana chart, even with the recent just doing nothingness. That's fine by me. And then you have like a bunch of like the meme coins moved big in the last week, but retraced a bunch of it in the last couple of days. Like just generally, like there's not been happening too much as Bitcoin takes a breather. Besides just ETH creeping up a little bit.
And the trenches are back, kind of. I mean,
they come back and they nuke again. Like what happens, at least to my knowledge, and I'm not a trench warrior, but basically you have like a bunch of runners and people are like, the trenches are back, and then intraday you get like a 60-80% pullback and everyone gets fucking wrecked, and then the trenches on another chain start waking up. Like you have a bunch of chains now with pump fun-esque protocols and like whatever. You have a bunch of, not even on different coins, you just have generally like 10 copycats of pump fun now, and people manage to extract any kind of money really quickly. So I think that's why the trenches kind of come back, and then the extractors just jump in, extract enough money to kind of stop the trenches from coming back, and then it's back to nothingness. I think that's been the name of the game recently. It's sad for the trenches.
You're just sidelined on the new metas. That's all I'm hearing, to be honest.
Yeah.
Specifically around Believe. You seen that? That's a fun one. It's the whole Pasternak launch coin
Yeah,
thing.
yeah.
Um, yeah, you can just like it's Jesse Pollack base 2.0 ish. Um, the whole
Tokenize
like
everything.
tokenize everything, internet capital markets, etc., etc. Do you know what? There is a world in which this kind of thing wouldn't be as extractive and actually gain some traction. And I think that world is one where the pre-existing token creation meta wasn't entirely based on like Solana meme coins and Solana bundled scams. Because I think this is one of those cases where the execution of the idea is massively burdened by the immediately preceding kind of market dynamics, right? Like if
Yeah.
people are used to like pump fun basically and are used to like Solana extraction or whatever, and then a similar mechanism comes along, there's already like an established canon and game theory for like how you're supposed to play these games, and the kind of game theory optimal EV maximize extraction kind of way of playing it. And I think that sucks, right? Basically, there is a culture that this meta has inherited, and that culture sucks. And it's like a max extraction, fucking bundled runner, vape, pump and dump, whatever type of thing. Like, if this thing came out of like a healthier market, I think we'd be like at least more intellectually open and curious about it. Like, oh, this is interesting. Let's see what people do. But like, we have the answer to the question because it's been like the
We
last
already
2 years
know,
of the
yeah.
market. Like, we've seen this play out. So I think it's unfortunate, like, because in theory, if someone came to us in 2021 or even 2018 and was like, yeah, this is like a way of doing things, we'll probably find it interesting. But now that we've seen this movie before, I think it's far less interesting. And it's basically what? Pump fun, or at least like new token extraction meta reskinned. Maybe that's too cynical, and I'm open to changing my mind if good evidence emerges, as always, blah, blah, blah. But I just think it like doesn't help that we've run this before and we turned it into like one of the worst things that it could be, and this is just a reskin of that. Like the whole, I mean, maybe there's a world in which the froth fucks off and the whole like coin it, internet capital markets, launch whatever thing stays and gets a healthier skin. But I think in the short term, medium term, even, I'm not super bullish on this type of stuff. For me, it's the same thing all over again.
Yeah, I mean, it could be the new meta, and it could run for a while. Like that's just how it goes
Yes.
in crypto. You find something that sounds at least somewhat interesting, and then you run with it, and then it retraces 99%, and then you find the next thing. It's kind of what we went through with the memes, right? Like everyone was like, "Oh, the memes are the future." It's kind of like the antithesis of a meme. Generally, like a meme is not the future; it's generally the past, right? But at least, I mean, that's just kind of how it works. But they can still run like crazy, and they can still, even when they've run before, like the memes have, for example, you've seen a bunch of memes go up like 4, 5, 6x from the bottom. They're still down like 90%, but they've gone up a lot. I generally think the problem with our cynicism is that eventually, I at least hope there's going to be something in crypto that actually is quite cool, right? And we're probably going to be haters at the beginning because we're like, we've seen this before. We know exactly how this plays
Yeah.
out. And
Yeah.
then it actually does something. But the cool thing is you can always change your mind if you're not elderly. You can always change your
So we're
mind.
fucked, is what you're saying.
Getting there, yeah.
No, I think that's fair. Like it's a good framework to have, right? Like our priors are massively shaped by the fact that we've seen a near infinite, colloquially, of course, like a fucking Monte Carlo simulation, if you will, of how this plays out, and that has shaped our worldview in terms of anything that allows people to launch stuff and have like a massive insider advantage. I think if anything, the burden of proof is on the new protocol or the new system or the new market participants to prove that it's not like the other 99.999% of the time where it gets professionalized and extractive faster than you blink, and then it fucks off and we pivot to something else. Like I think that's almost a good, safe, rationally justifiable baseline to have for new crypto stuff. And then if anyone wants to pleasantly surprise us, you're gonna have to prove it. Like in TA terms, I guess the same as it's similar to things we discussed last week, where you've got like a mega massive downtrend, and then you have like a green hourly candle. And it's like, how much does that really shift Is that enough to make you shift your mind on the macro trend, having one hourly green candle? I mean, someone's going to say yes, and they're going to be right, and they're going to be early, and they're going to be rewarded for it. That's fine. It's how that you get paid for taking the risk. But like, whatever out of 10 times, you're better off having like a higher standard, like higher burden of proof or higher evidentiary threshold for this stuff to force you to change your mind. And I think, for me at least, that's how it works with coin launches and like frictionless token launches, because we've seen the impact of it over the last like many years. Even pre-Solana, we saw it with NFTs, right? Like how relatively easy it was, and how many like dead extractive collections are there, and how much ETH was spent and wasted on those. I'm sure some metaverse games are supposed to come out this year, right? Like remembering,
there are. There's already a
some
whole
of the
thing.
roadmaps.
Yeah. So I agree with you. Like it's just gonna be, which is gonna be the boomers who are gonna hate,
Of course.
and then
Hopefully.
a bunch of you guys hopefully will be like, hey, you guys suck. Like I saw this coming like from a while away.
Yeah, fucking idiots. Wake up and actually do some research.
Yeah, and I mean that's fine by me.
I'd love
That's
to think
fine by
we'll
me.
be receptive enough for it, and not too washed to at least
No,
have an open mind.
I think we would be, like, as long as it's not something inherently useless, right? Like the meme coins, for example. I think like everyone knows that like the end result of this is zero, right? And I think at that point, like hating is very justified, even if they go to infinity in between, right? Like if the end result is zero,
Yeah.
like hating it is justified. But like when it's something where you're like, oh, this could actually be something at some point down the line, it makes sense to at least give it a little bit of a chance. And I don't think we would necessarily be too small-minded to not do so.
Yeah.
So I've hoped to us on
Hyperliquid.
that. Yeah. I mean, it's true. Like the hyperliquid thing, right? Like we were like from the get-go, like, I mean, why are hating? Like, why are people hating
Yes.
this? Like, let's just, if you like it, just fucking buy it.
Yes.
And if you don't like it, just don't. But this is not something.
And the
that
whole wealth effect thesis, right? That
Yeah.
was an example that someone left in the comments, and then we discussed. Like, yeah, that's a good example.
Yeah. So.
It's funny that like I've literally got the CoinGecko article open about this launchpad, internet capital markets, whatever, believe. The legal part. Your coin must never represent equity in your company. Do not imply or promise ownership. Do not promise or imply financial returns. The coins should not be marketed as investments. Do not offer income or yield to holders. This includes profit sharing, dividends, or similar mechanisms. Your coin should function like digital merchandise. Think of it as a way for supporters to back your project, not a security. Like, yeah, I mean, I didn't expect otherwise, but like, it's a meme coin. It's like a startup
It is a meme coin,
coin-ish. I don't know. To me, it's like, basically, we've entered the clone era of Pump Fun. That's what that feels like to me. Where Pump Fun itself is like feeling some of the pressure, so they're launching like Pump Swap and live streaming and a bunch of other stuff. And then other platforms are like, dude, so much money there's so much revenue, whatever that means. Well, no, it's got a more formal definition, but just in general, like there's so much economic activity on Solana, and people put their money into fucking anything. Like, I want a piece of this, and the market participants are seemingly not just immune, but keen for new token launches. And Pump Fund had essentially monopolized that entire flow, and now you're seeing like competitor / copycat behavior trying to take from that same pool. I just think that the risk is that pool is getting smaller, in my view. Like, I could be completely wrong. I mean, maybe revenue on Solana itself is stable or up. That's completely plausible. But I think like the amount of retail traders and new inflows into the market and people willing to get burned on runners, I don't think that whatever that figure is, however you want to formalize it, I don't think that number is going up. So that also doesn't make things particularly easy.
Yeah, I agree.
Oh, man. The other quick news articles I had, we could kind of touch on these very quickly and then give people their time back. Brazil first listed Bitcoin treasury firm buys 274.5 BTC amid growing corporate crypto adoption. We should probably do a show about this whole crypto corporate adoption meta, specifically these like BTC holding vehicles that issue debt, equity, buy a bunch of BTC, the whole NAV discussion, the flywheel effect. I think it'd be a pretty interesting episode. Just dedicate like 20 or 30 minutes to it. I don't think it's risk-free. I think Saylor in the past has been quoted as saying that it's some sort of financial glitch because of the flywheel effect. And like, that's not how it works. No. I don't know. I'm not a huge believer in financial alchemy, if that makes sense. And we've seen flywheels in crypto, and we also seen the other side of how they end, and it's not pretty. It's like, how many times realistically can you reskin bullish price expectation and demand for BTC, and like how much can you get away with essentially? But I think it'd be an interesting thing to talk about in line with our tradition of talking about these types of big, I guess, corporate strategies. You remember we talked about what was it? Bitcoin backed. The AVAX thing. What was it? I forget. They were like, oh, we're gonna have like a reserve fund of
Oh
digital
yeah.
assets or whatever. And then we had meme coin reserve funds as well. And then we talked about Terra using BTC for a strategic reserve and collateral at the time as well.
Well,
Not too
always
optimistic on that.
hating.
Always
Yeah.
fucking hating. So another thing on our radar that I think we should cover in a future show in more detail is MicroStrategy and all of the, I think probably more concerningly, the kind of copycat behavior
Oh yes.
that's sort of really proliferated recently. That might
I
be a
think we
fun
all
one.
know how it's gonna end, though.
Go
Like,
on, tell us.
I mean, basically, a bunch of like the copycats are gonna keep copycatting, and as long as it works for the copycats, you're gonna get more copycats, and then those copycats are gonna get copycats because the copycatting worked. You know what I mean? And then it's a bubble. Like that's straight up a bubble that you get. At the moment, the new copycats don't win and have to kind of like start selling. The older copycats start losing and have to start selling. And then you go all the way down and unwind the entire thing again. We've seen it before. We've gone through it in crypto infinite times where, like, when you build something like this, it almost like it always historically it always unwinds eventually. Cool thing is, like, this kind of bubble behavior is basically the best thing for us as traders. Like, this is why this market is so great, because every single cycle we find a way to make this into a proper bubble and to completely fuck over everyone. And then as a trader, you can just be there and take advantage of the prices that are much higher than they should be, and then they go much lower than they should be, and you can just be there and be happy. But I think the end of this, especially the more interesting and, like I said, the more copycats there are, to me is pretty clear, which is a massive, massive crash. I'm not, like, a lot of people are afraid that MicroStrategy is gonna go. I don't think that it has to if they play it smart.
I
They're
agree.
basically the early investors. They can get out of leverage entirely if this like picks up, right? Like, you have a bunch of people basically going more and more ham, and as long as the MicroStrategy doesn't join in and it's like, oh no, we need to fight these people for more allocation, and just does more and more risky stuff, I don't think it's necessarily in danger. But this general behavior, I think, is quite dangerous, and a lot of people will disagree and will be like, hey, you don't fully understand it. And we had the same people, or like the same types of people, in our comments about Luna, about any of these things, where it's like, just from a glance, you know this can never work for everyone.
Leverage is leverage.
Yeah, it's just not how it works. And every time people lever up like this, and get successful with it, it attracts more and more morons. And we've gone through this plenty of times in crypto history. And that's the most dangerous part, right? Like, moronic behavior attracts more moronic behavior.
Yes.
And crypto is like a big magnet for moronic behavior. It's just like there's a
Present
bunch of
company
morons.
included. Yeah.
Yes, I mean, this, as you can see with us being involved. Yeah.
Yes, exactly.
So it's kind of like, I think the end of it is going to be a massive, massive crash. And the cool part is, up to the end, it's going to be a rally, right? And I think we are not necessarily, unless something majorly shifts on the macro side of things, which is really hard to predict now, I don't think we are there yet. As long as macro holds steady, I think we're in the process of building a bubble. But we're not at the end stages yet. But it's always a risk at that point, right? Like, when you have like a balloon that you blow up, like, if you come at it with a needle, right? Like, if it's not fully blown up, you can still easily poke it and it's still gonna explode. But the risk for it exploding becomes more and more, the more it's blown up. And I think that's kind of where we are right now, where it's like we're still not fully bubbling, so it's not like some random thing that can blow this up. It would have to take something big, but this kind of behavior, I think, can very much lead to the bubble like fully inflating, and then it takes very little to deflate it entirely again.
Yeah, I mean, look, MicroStrategy doesn't have to get into any material trouble to see the worst consequences of it, right? It's just the copycats need to get big enough, and then the copycats who are late need to eat shit, and like that's enough. And
then at that point, you get MicroStrategy into trouble as well, right? Like that's the thing. Like as long as they don't play it, like they have to play it smart. If they play it smart, I think they're fine. But like the way I see Sailor, I think he's gonna start stressing about like other people owning a substantial amount too, and then he's just gonna try to buy even more. That's kind of the type of person that I think he is, but I hope I hope I'm wrong for everyone's sake, because I think MicroStrategy is something that would be bad. Like that's starting to approach like too big to fail territory, and there's no bailouts in crypto. So like I would like it if he stayed at least on the same end. But even if he does, like you said, the behavior of the copycats can easily take this down.
And like the second order effects, right? Like market nukes, the copycats blow up. That directly affects MicroStrategy's ability to like raise debt, right? To buy more BTC. And then the downstream effects of that essentially get priced in when people are like, hey, every US session we had like every week or every month, every whatever snapshot time period, we could rely on an indeterminate bid on BTC for the market to go up. Now I'm less sure they'll be able to do that, and so I'm gonna close my longs or sell or whatever else. So like even perceived weakness or a reduction in their ability to run this thing up still has a market impact, even if like MicroStrategy ends up being completely fine, you know? Like this is the thing about this, like there are second and third order effects, not just from all of the, you know, MicroStrategy and their copycats' ability to raise debt and buy BTC, but like what does the market do when it starts to get a whiff of the fact that they won't be able to continue doing what they've been doing, you know? That's, if you don't talk about a flywheel, that's a real flywheel as well. Like there's the other side of it, basically. Like the, you know, the bullish side of the flywheel is like BTC up, everyone's bullish, demand for the stock, trading at a premium to NAV, etc. So you can issue more debt, buy more BTC, it goes up, everything looks sexier, so on and so forth. But then the whole reason it's a flywheel is because the other end of it exists as well, where like BTC down, your ability to raise debt and continue buying as much BTC goes down. The market participants get sharp to that fact and buy less or de-risk, and you know that pushes BTC price lower, etc., etc. So like it works both ways. I will say, at least for consistency's sake, this is something that we and I mean on this show asked for. Like you'll recall previously we were like, crypto needs a credit cycle to go up, and in general like uptrends are backed by or are based on massive expansions in credit. Obviously there's a bad bit when it all blows up and we die, but like if we want to enjoy the upside and the crazy uptrend, you need credit and or leverage or some combination, and
we're getting it.
We're building it. The only other thing I had, by the way, was Coinbase offering 20 million bounty on data thieves who tried to extort exchange. The whole story is insane. Like KYC, I think in the age of like outsourced customer service reps, AI, you know, the average crypto exchanges KYC policy or whatever, I'm just like bearish KYC in general.
Yeah,
and
just
like,
fuck off with that
just
shit.
Fuck off, yeah. And no one launders more money than these fucking big banks anyway. So like, really, what are we, you know, what are we doing here? I just think like it's such a terrible fucking attack vector to have in crypto. And it's like Ledger had a data leak, now it's Coinbase. At least they announced it. I'm sure there are a ton of other service providers and exchanges and whatever else in the crypto ecosystem who've had these sorts of leaks and just like didn't disclose them. I just think like the KYC experiment has kind of failed, and I don't like it. And we need to, so basically we should all scan our eyeballs for WorldCoin and then ZK proof it or whatever, you know, some shit like that. Obviously that part is facetious, but like, yeah, KYC is proving to be a bit of a global disaster, especially in crypto. And like, if you're French, you're just going to get hit by a wrench, apparently, on like, on like any given day of the week. So like, I don't know. This is super unfortunate. And
It's awful. Yeah, and I mean, it happens too many. Like, just generally happens too much. It just makes crypto uninteresting. The sad part is not really the fault of the crypto people. It's regulation that is really fucking stupid here. Because I mean, the exchanges really don't want to do KYC. You know, like they a lot of the crypto exchanges were like trying their best to fight it as long as they could. It's just it's the law, right? And the law is terrible in this case. And then you get a bunch of people get their fingers cut off or whatever, get like just for a bunch, like for a little bit of crypto. It's just fucking stupid.
Yeah.
Uh,
Hyperliquid fixes this, Don.
yeah, and the thing is, like with KYC, right? Like if you're talking about money laundering or whatever, like it's so easy
Oh, dude, yeah.
to get yourself like KYC'd.
Yes, you can just buy really good KYC. Not that we're
For
recommending this;
nothing,
it's
yeah.
illegal, etc. But like Zach, who's a knows this stuff better than anyone. He's like, dude, all the real whales and rich people, and even like increasingly normal people, just have a passport or an identity that they use for this type of stuff because it's just not fucking worth it, you know.
Yeah.
So naturally, they get the people who are smart-ish or sharper or willing to bend the rules get insulated from it, and then it's just like normal fucking people are at disproportionate risk for this type of stuff.
Yeah,
It's
and
just
the
a bad
criminals
deal.
obviously do it too, right? Like
Yes, yes.
it's not like this is preventing much. Like the criminals all have fake passports, all have fake like because it's not hard. Like this,
Yes.
and then you have like everyone that is using it legitimate is at risk, and everyone that is using it illegitimately is totally fine. Like,
Yeah.
what's the point of that
Completely
system? Like,
backwards.
makes no sense. Yeah.
Oh, well. Always love ending the show on a positive note, Don.
Yeah. Well,
That's all from us, I gather. Hope you all
yep.
have a fantastic weekend. Hope you've enjoyed 2 shows in a row. We'll keep the streak alive. Thank you to you as always for supporting the show. Their links are available in the description. Before you click off, leave us a like, leave us a comment. Let us know that we're washed up boomers and what we're missing. If there's a particular comment highlighting the current meta, whatever else, we'll talk about it next Friday and make ourselves feel bad for being such fossils. That's all from us. Have a wonderful week and weekend rather, and we'll see you next week.
Bye bye.